Good morning, everybody. It is Monday morning, the 8th, and let's look at the market. The market started to open lower today. Let's look at the Dow Jones, 7-8, pressed against the trend line. And so it looks to be seeing some sort of an exhaustion type of action in the short term, especially going against that line. Again, as you see here, you can probably see a penetration above it to push through all the buyers in, or at least get the sellers to come in. Either way, it could give us a little bit of a pause here, and it started back on the 28th of March, this run that we've had. Again, we want to see the 9-13 for the indicator to show us, or to give us an indication that there could be an exhaustion type of move, either up or down, and we can anticipate the next turn. So the 913, the 139 is called the setup. So the 139 up is a sell setup, and the 139 down is a buy setup. And so the 1 to 13 is a countdown. So 1 to 9 is the one we're looking for price to be defined, and that will be the momentum part of the indicator, and the trend part of the indicator is the 1 to 13, either above or below. So this is a sell countdown, and this is a buy countdown if it's underneath. The same way where it's the 1 to 9 is red going up, that's called a sell setup, and the 1 through 9 that's on green going down is called a buy setup. So this is trying to finish a sell setup, and again, we're looking around this area should be a good topping area, maybe as high as this line 26.6 possibly, and support technically goes all the way back down to the low 9. So that would be a good sell-off, or anytime we see it with 1 through 9 on the buy setup, that would also point for a possible entry on the upside. So that is the daily on the Dow, and let's look at the weekly. Still getting a push up, and as you can see here, this and the screen. So it's a brand new week, and this is a support area for, or at least it keeps it within the count. This has to go back 4 bars ago. So for this to hold up, it has to go higher than a close of 1, 2, 3, 4, and this line. 25,850 roughly. So that will turn it negative on the Dow Jones, and it's so early. 28. I want to see it on 25.8 roughly. The daily looks like. Right around here. So the weekly, there should be a battle. If it ever comes down to this price, there should be a battle from the bulls to try to hold it up. But for now, we can look at the initial selling to see how that works out. For example, here kind of faded, and here it turned around as well after buy setup. So we'll take a quick look at the weekly one be the daily support. A little bigger. So that starts anew. From a longer term perspective, we're catching above this trend line, this channel, and that has already been broken, followed through over here, and now it looks like we have a little bit of a cup handle that could be forming on a long-term basis, on a weekly basis, and on a monthly. We could start another 9 months worth of a sell setup like this. So again, pretty bullish after seeing how we bounce back, how high and how the relative time that we bounce back. So that's a very good sign for the rest of the year. At least we're not. It doesn't seem like we're going to go to a bear market within the next 9 months. Just make sure we don't get faked out like we did back here. So I mean, from the weekly, the monthly, things look different. And who's here? So this is more what we might be looking for on the down after 13, with a little bit of consolidation, and now the bulls are ready to take it up at least for the next 9 months on an uptrend. However deep that may be, or however high that may be. It could be a small one like this, it could be a steep one like that, etc., etc. So it can take many forms. That's why the timing indicator does help. But sometimes when you're looking for price to say, oh, when I make it 20%, but it's getting hard time at 12, and you're seeing it starting to come to 9, so you have to come to grips with the fact that it might be all the market can give, all the participants. And that's where it helps. So that's a long-term look on the monthly. It looks quite good. So like I said, last month, pullbacks should be bought until we see any real warning signs. So we'll take shots, some shorts, mostly longs. Keep it going. All right, so let's look at the VIX for a particular moment. After hitting the bottom part of that channel, now we're getting a bit of a rally back. So just taking a look at some of these indicators where making new lows. However, our indicators are pointing that there is some improvement, there's some momentum. Then we'll just listen and see how how it works in the next few weeks. The weekly 913, that's starting new. So we could be in the very bottom of the range on the VIX side before we get a quick pops here and there. And if you see buy setups forming around here, and I can get a little bit of the text here. So all right, so on the weekly, it looks like we might be looking right on the bottom. So that's how it's looking. Going back to the Dow, look at the hourlies. That's something we didn't look at yet. So a gap lower after 13, a bit of extension. The MACD obviously has on an hourly deteriorated, and it was an oversold like this. We have a little bit of extension, but the MACD was pointing lower. The MACD is pointing lower, and oversold on each side of the stochastic. And so that looks to be in line to daily. Like I said, we might have a little bit of a push again until 9, and then eventually you could see a little bit of a pause. A recent break last week. All right, so take a look at some individual. Let's look at the S&P as well. S&P is important. Same thing as the 913.9 repeating again. The change of direction could be expected, or at least a halt from this current rally could be expected in the next few days for some digestion of the gains. S&P for a while. There it is. All right, so everything still looks positive from a weekly. We'll go quickly monthly. View, and that it looks like we have momentum on the upside still. And that's as we start off this week on Monday, and then hourly 2913, and now we're starting to get a little bit of a exhaustion in buyers. We'll see how that transforms in the next couple of days, how that top gets processed. There's many topping patterns, so can't really box anything out, and that's where timing indicators could help, and that's where it's helped us. Now lift, quick look, after it broke through 72, went as high as this gap of 75, so that has to get broken in the next couple of days, and a negative pullback here could look to see if we can fill this gap just right on the buy point, good entry point for a quick trade from 71 to at least 77, counter rally 77 to 81 versus a loss of 69, roughly 3 points. And that's how we use our timing indicator for trading on daily. I think it's set on a 5-minute chart. This piercing to 200 bar moving average. And that's printing at 13, and we're looking for 9 to follow right on filling the gap. And if that holds, we can expect at least one last rally to close the gap at 78. So that'll be a 9, 13, 9 on the down, filling down the gap. And from time and price perspective, it looks to be supported. So that hourly will come here, and for that to stay positive, it's got to at least consolidate for a few hours and negate these closes, these bars, which means it has to stay underneath this to start a new one. We can have a big, powerful one. That's another way out, but we want to see this hold here. So if you're truly conservative, and you're quite nimble, Look at some of these lines. And if you want to be really nimble, make as small as possible. You can even move up that stop loss that we initially had here. Move it here, 71. And chance of buyback at 69. We're in this part of the deep interest. So if you're that nimble, fine. If not, you can always leave it here at 69. Let the stock work itself out. But here's how you move these stop losses to minimize your losses and maximize your gains. Again, you can't have your cake and eat it too, so you can't really have it both ways. So if you want to risk a little bit, then you give up your quick upside. But if you're nimble, like I said, you can get back in when it comes back down to 69 or lower. That's fine, but otherwise, stick to proper and conservative risk management. You don't want to see it close below this. Even 71.5. This is just, a crazy spike when it's shaken out right here. So, from a 5-minute perspective, you're trading that, or if you're trading the hourly, from this channel, it's already in danger of pulling back. So make sure you keep these orders tight. And we have to finish this above this line, keep this channel up. So keep yours through here, come right back up, finish the hourly at this part of the trend, and it'll ultimately look very good. So that's another 15 minutes to see how that one ends. Left the daily, nothing much. Weekly, obviously you can't really say much about that either. Some of these ideas that we put out, just look at some of these daily for CTST. Looks like it's could be getting some good support right around the 7.25 range. A big good hold. HCD continues to trade sideways, trading with HEXO, all kind of trades similarly. HUYA, we're still waiting for this to settle itself after that secondary. And VIX right down to a good support level. And now GTX, get tired of the weekly. Let's see if we can reset the count. Something more favorable. So the weekly looks like it's at a 9, but if it continues on the upside, at the end of it, we could see it form the 13 part. But again, you can have the 13 where it goes up 1, 2, 3 weeks and then pushes back down. But overall, the long term still looks positive. So with these type of trades, you have to be quick and understand you look for days. There might be better ideas out there, so that's something to take into consideration. Blank charging, still just waiting, and that looks pretty good. HMS, same thing, all look the same. This has already failed from that possible trade, so keep it down. That's it, say bye-bye, it's not a big deal. Next would be here, if you guys are, well, at least we'll see that. It's only the negative countdown, so that's not as enticing. Levi's. This could really bleed. This feels all-time low, 913. It could really be bearish. So 3 more minutes. Let's take a look at possibly what we could look for in Levi's. Look at some of these retracements. You gotta go to 0. We'll go to the top of the IPO. Look at Fibonacci levels. See how they hold. So count is up. And now we will see so below 21, we could look at 18.5. Right around the quarter. And it could really get bad if that's the case. So that will be really deep into the below the low. All right, so there you have it. Let's close out with Levi's. For the weekly, there's no trend. For the daily, it looks negative still, and the hourly is looking very negative also, with the MACD coming down. The stochastic is looking oversold, and it's still had a hard time. So might be looking very weak for the buyers of the stock. And if you want to avoid it in the short term, wait for it to find a base somewhere. At least one way is to wait for 9 consecutive close, which is a setup on a buy setup, and at that point, it's a better entry level. Whether you get it or not, you can watch for an hourly as well for a trade if that's something that you guys are into. So there's a lot of ways to trade these names. So if you guys have any questions, let us know, and follow us, like us, and we'll get back to you as soon as we can. Again, thank you for watching. Thank you for watching the replay, and we will speak to you shortly. See you tomorrow. Bye-bye.